Welcome to another episode of the Workers Podcast, where we bring you important discussions that matter to workers all across Antigua and Barbuda. In this episode, we sit down with Mr. Dalmer McCoy. He's the principal at TRM Consultants to break down the ABHTA and the Antigua and Barbuda Workers Union Health Insurance Policy, a comprehensive plan designed to provide hotel workers with essential healthcare coverage. Now, with the Antigua and Barbuda Workers Union playing a key role in securing this policy, we want to ensure every worker fully understands the benefits and the protections they're entitled to. So, what's covered in this policy? How can workers access benefits? And what should you know about claims and reimbursements? All these questions we'll have answers to in this episode of the Workers Podcast. So once again, I want to welcome to our podcast, Mr. Dalmer McCoy.
Good afternoon, Anderson. It is always a pleasure being on your podcast. I think I've done one already, and we had excellent feedback on it. And I'm one of the person who believes in education, especially the line of insurance, which I played a pivotal role and spent so much time in. Because once you educate the person that are making claim, the person that are buying insurance or engaging in insurance, it makes one's life easier. And I'm saying is that you start speaking about the ABHTA, which Antigua Barbuda Hotel and Tourist Association, and the ABWU coming together and put this sort of idea together, and then we were able to develop it. I think is a master plan. And from our feedback and from our looking through, it's about the largest comprehensive plan within the OACS and maybe Caribbean at large. Because what actually happened is about 32 and growing members are covered under one scheme. And I am hoping and speaking to others like the credit union, the Bankers Association, because as people always speak, power come together, it makes situation accessible. So in this situation, what the Hotel and Tourist Association and the ABWU were able to do is that instead of one company, like for instance, one hotel, on an individual basis, going into an insurance company and discuss insurance, because what happened is, they might be going inside there with a loss ratio of 70%. But when you bring 32 together and 50% of the 32, which is 16, having a loss ratio of 20% to a loss ratio of 25%, if you do the arithmetic, you see what it translates to. So you have 32 people coming together, loss ratio come down to 30% or 40%. One person going there, loss ratio of 100, 200%, obviously, premiums out the sky. So we were able to, but let us get into the dynamism of the program. As I said, what we have is what you call a medical health, accidental death and dismemberment, and a life program. So it's a 4-pronged program. So you're talking about medical insurance, health insurance, accidental death and dismemberment, and life insurance. So that is the program that we were able to sit with these folks with and design something that were attractive to the persons who want to bind the program. Now, you have individual medical and you have group medical. So when you say individual medical, you, Anderson, can move into any insurance company and buy an individual medical plan. However, again, as I've just said to you before, you alone go in there. So it's assessment on your health based on your medical condition, everything. You will be rated, and a premium will be charged to you as one individual. And you would know what will happen in those instances because it's your loan. Obviously, price are going to be different. But when a pool, because insurance likes to talk about pool, when you have a pool of risk, what it does, the loss spread. So you have 10 insurance company, 15 insurers coming in, and there's a claim, everybody packing into the pool. So if one person in the pool has an accident, it is not as significant because many contribute to the pool. So insurance is about pool. So bigger the pool, obviously better your chances of paying a premium commensurate with what you're putting in.
Okay.
And what you take out again now, again, because the larger pool you're in, it makes it better. So you have individual medical and you have group medical. Now companies decide where the group start from. So some say 5 persons, some say 6 persons, some say 10 persons. So it's 10 coming together again, and they say based on their acid or the means test, they find working with 10 is better because you have a better spread and a larger premium pool coming to you. Okay, companies set limits. So within that limits, they're determined by categories. So some call it gold, some call it platinum, some call it Medistar, some company. I know that we are zeroing it, and our emphasis is on the specific program we have for the Antigua Hotel and Tourist Association, but for the purpose of the audience, because you're not listened to by just the person who participates in this program.
Yes.
You want to educate the public. So we have to at least segue a bit, and if you permit me to segue a bit indeed.
Absolutely.
So I'm saying here, you have limits. So within the limit structure, you have folks going up to 3 million. Around Antigua, we basically get about 3 million, 2 million, 1.5 million, 1 million. When I say that, you speak to lifetime limits. So for instance, you take out an insurance, a medical policy, and you have a 3-year lifetime limit. Even though it says 3-year lifetime limit, you can hit a 3 million limit or a 1 million limit in 6 months.
Okay.
So that's lifetime limit. So it's the policy actually, because the number of claims you made and the magnitude in terms of the dollar value for the claim, you could eat up or use up 1 million in 6 months. So you have no insurance.
Wow.
So that's what it is termed lifetime limit.
Okay.
So you have to be careful, and the programs have got to be managed effectively, right? So then that's why we say you set the lifetime limits. Now you have lifetime limits, and at the same time you have coverage benefits. So you have medical coverage, you have dental coverage, you have major medical are like you having surgeries, major surgeries, cancers, all kind of different. So those are termed major. The reason major, because the extensive costs for these that you have to put in, right?
Yeah.
You have e-ambulance coverage. So for instance, if you cannot be handled in Antigua medically, then e-ambulance lift you out.
Yeah.
E-ambulance ranges from about $15,000, right? So you're saying with that, you have each employee that are under the program, you also extend it to cover dependents. So you're dealing with their dependents. So it's not employee only, but employee plus dependents and their employee family. So all these dynamics are covered under a group medical plan. Okay. The plan also extends to cover a wide network. So once you have that coverage, the insurer that you are dealing with, what they would have gone out and do their little field work. So they go and talk to general practitioners, they begin to speak to specialists, and what they do, they say, look, we have a portfolio for medical. Our income portfolio, look at a figure, and we're prepared to do business with you. We can guarantee you, based on the number of persons who participate, who buy our program, we look at the ratio of people getting sick, people going into doctor, we can guarantee you that, look, we could have 2,000 or more upward going in through your doors each and every day. So what they did, they discuss levels like, for instance, okay, we'll pay you if you see one of our patient $200.
Okay.
We will pay you, your specialist, your cancer specialist or an eye specialist, will pay you $300. So they go out there and they negotiate within a network. So for instance, Epicurean Pharmacy, Softly Pharmacy, any pharmacy can take. We don't really want to call names. Any lab providers. So they set figures, and this happened worldwide. It's not just dominant to Antigua. So a claim you're going to make, the insurance already know that they're not going to charge more than a set amount. However, what I'm noticing coming through in recent time is that the insurance companies are not moving with the trend of costs and renegotiating the pricing with the doctor. So sometimes you go to a doctor, they will tell you that the insurance company only pay up to 200, but my bill is 300. So therefore, you have they're going to pay because it's also have a coverage of like a deductible 80-20.
Yes.
So you pay 20%, the insurance company pay 80%.
Yeah.
So you're having 80% of 100. Let us say the negotiated bill that the insurance company works out with the provider is $100 for a particular procedure, whatever it is. You pay 20%, that is $20, and the insurance company will pay 80. However, the doctor said, my bill is 200. So what actually happened, you got to pay 20% plus the extra $100.
Yeah.
And that is something that is happening regular within the fraternity. And I am hoping that insurers are listening. I know that they're cognizant of the fact that that is happening. But seriously, it needs to be addressed in that particular area. Another area that comes out to us is an area of what you call things like pre-existing illness, and you think about doing your physical. Now, under most of the policies, your limit on physical ranges from $400 to maybe $800. Now, when a lot of us go and do physical, we go to the doctor and we do a whole suite of things. We do all the blood tests you can think about. We see the doctor and we do other things. Now, I'm saying, and I hope that insurance company don't think that I'm robbing them well. When you go to do your physical, what the physical should be, you see the doctor is $200, and you do just a lipid test. A lipid test probably is a glucose test or whatever, your blood sugar level. When you go and do a whole suite of blood tests, it could come to $2,000. And remember, the limit for physical ranges between $400 and $800. So what happens there is that the insurance company said, my limit of payment, which doesn't have a deductible, is $400. Then you say, wait, I take out insurance and they tell me it's at 80-20, but how now they're telling me they're only paying $400? And I said, these are the things that I realized a number of new entrants coming in the group medical find themselves in an awkward position. Because again, you are not a part of any insurance. You get to work at one of the institutions here. You realize you have medical insurance, so you're gone, you want to clean your teeth, you want to go to check, you're doing all sorts of things. So within the first 6 months to a year, you always see a plethora of claims coming. But then as you spend more time within, because more you see the doctor, healthier you're likely to be. And that's why it's important that when you have staff or employees who come onto these programs, it's important they see the doctor.
Okay.
And one of the things that we're advocating is that you should see the doctor every year to do a physical. And what we're saying that if we have persons on that are not prepared to go to the doctor, we are thinking about finding a way to, you can't have insurance. Because it's better for you to have all your employees seeing the doctor than 75% of your employees not seeing the doctor. Because one day what is going to happen? You just have a plethora of people getting sick, because they're never gone out and see doctors. So that's the nature that, because group medical is very needed. We need group medical insurance, and we need people to go and see the doctor, because I'm saying expenditure for medical is like out the roof. And I'm saying I am so happy today, the move that was made by the Antigua Barbuda Hotel and Tourist Association and the Workers Union by saying they negotiate for you, and as a part of the collective agreement, you must have insurance. And they've been able to negotiate with employers that the employer contributes 60% and the workers complete 40%. You don't want anything better than that. And I'm saying here is, it is important. The limits, as I referred to you before, we're still looking at getting these limits up. The situation is the market premiums that are charged will have to step up. Because I'm saying, typical example, because of the numbers under this particular scheme, because this scheme brings in reference between $2.5 million and going upwards of $3 million per year.
Wow.
And any company gets it that can determine whether they make a profit or they make a loss.
Mm-hmm.
Because of that, and the skill set of the people who manage it, if they present data and information properly,
Mm-hmm.
you will have a number of insurers going at it. So this particular program, one person to be insured as a person ranges about $89.
Mm-hmm.
1+1, meaning an employee and a dependent, could be husband, could be what, is about 126.
Okay.
And a family, which goes up to 4 or 5, is 226.
Mm-hmm.
I will indeed tell you, Anderson, if you go outside there and run those numbers, the majority of the companies, one person is over $150, $160.
Mm-hmm.
1+1 reach at 3, family between 400 and 700,
Mm-hmm.
based on the other thing. Another area that we work on aggressively is what you call pre-existing illness. Although the company, based on our condition, takes you have what you call waiting period, because you have to be properly screened, because nobody wants anybody that has pre-existing illness.
Okay.
Although in the US, they have to accept you how we take it. So it's mandated on insurance company in the US. Whether you have diabetes, whether you have a cancer, whether you have, they must accept you.
Mm-hmm.
In Antigua and Barbuda, they either reject you or say that we're only going to cover you below certain limits.
Yeah.
Again, in Antigua and Barbuda, the coverage on the group medical is when you get to 65, if you're covered for $1 million when you started at 15-20, when you get to 65, it's chopped by half. So your benefits, lifetime benefits, will move from, if it's 3 million, 1.5 million, if it's $1 million, 500,000 when you get there. And then some companies, you're struck off somewhere between 70, 72, or 75. And then there are companies who take you up to what you call lifetime, up to 99 years, so take you to death.
Mm-hmm.
And what we have been able to do with this particular program, we do it on a 3-year lifetime cycle. What it means, if within 3 years or less than 3 years, you would have used up all, we have the privilege to renegotiate for you. Generally, what it was written is that once you reach a lifetime limit, whether in 6 months, a year, or something, you can't get insurance again. But what we have done, we have put in a program in place that is a 3-year renewable, meaning if you reach the limit, at the end of 3 years, we can go back and negotiate with the insurance company to extend and to give you another 3-year lifetime. As I said, in addition to that, what we were able to do, we have a 3-year renewable if you hit the limit and you negotiate it, but then you still can be entitled to be on the program up to lifetime.
Okay.
The other good benefits about it, from the company standpoint, if you reach retirement of 65 and you're a good worker and the employer thinks that they want to hold you on, the insurance can, the employer can keep you on that program.
Wow, that's great.
And those are the things. So there's some very keen areas. As I said, when you look at the plan, you have things like other things you'll hear about. They call it internal plan limits. Internal plan limits, and they tell you how much they'll pay for AIDS, how much they'll pay for maternity benefits, how much will be paid for vision benefits, how much pay for dental benefits. I said, we would not go into all that because you only have half an hour, but we're telling you. An area that is of very concern to is how you make a claim, right? And I think that's the instrumental that all should know. You can make a paper claim meaning you go to the doctor, you pay, and you get reimbursement. So as say, for instance, if you go and you only see the doctor and the bill is $200, you have what you call a 20% deductible, so you pay 20%, which is $40. The insurance company pays the difference. That is a coverage that what you do, you just pay the doctor the 20%, and the doctor now bill the insurance company, and the insurance company pays the doctor. Or if it's a provider, pharmacist or anything, you only pay 20% and they bill.
Okay.
Then there are situations where you now making a paper claim, you go to the doctor, go to the pharmacy, you pay all the funds, and then you get a reimbursement of 80% based on the limits of the program, because every area has a limit. So vision has a limit, dental has a limit, major medical has a limit. So even though you have this lifetime limit of 3 million or what we're doing, presently, up just yesterday, we've been able to reach out to a company out of the US, they call Best Doctors, what they want to work on. Where these plans have a limit of 3 million, we will use this 3 million on this plan as a deductible and then buy in excess of 3 million. So here it is, you have something going with an insurance company in Antigua and Barbuda, your lifetime limit is 3 million, then we can arrange 6 million on top of 3 million. So you have a $9 million cover. You utilize the 3 million, and whenever you burst or hit the 3 million, we can pick up above that 9 million, because generally we don't get that limit. And for that reason, that company is interested, because they would not be involved in all your day-to-day claims. It's only when you get to that. So for instance, if you have that particular type of cover and it's marginalized, you can go out and say, okay, look, I've gone to these folks outside the region. They're prepared to look at a $1 million claim. But then a 1 million, well, let us use $5 million claim. This limit on this is only 1 million. You come and say, look, they're prepared to pay, can you just pay me that? And they will accept. We have spoken to them and they're willing to look at that, and they just want to see what their numbers can be to effective. So I basically got 2 quotations for 2 persons just today before I came here, and now I will go on to them to sort of explain how it works and how the work can go.
But not to stop you, but what can you tell me about the need and the demand for higher limits?
What I will tell you, Anderson, you wouldn't need it. I have done some work, and nearly all the government ministers are insured under that upper limit program. Because I'm telling you, these days, with that program, they don't limit you to where you want a surgery done. So if you want to go to Russia to do a surgery, you want to go to India to do a surgery, whatever, they'll do it and they will pay for it. Once it's within your limit. But as I said, it costs more money. And that is what the key thing, because I'm saying services for medical are going through the roof. And it's rather, after COVID, everything just went. Price of medicine, price of services just went through. And now taken to what is happening is the great leader of the world decided that I think he has basically taken back from assistance that they give to World Health or somebody. World Health. So now they're not going to contribute. So again, prices are just going up, because our small island territory are challenged by these things. Global warming and all these things affect health, affect these things. I was listening to Dave's show, and a guy was there talking about the health of the water we drink, and all these things. And all these contribute to the everyday insurance. An area again that struck me very hard and people stigmatize and is mental illness. Now, this policy that are here with us speak to you about psychiatric treatment. Psychiatric treatment is certified. You got to be certified lunacy by a psychiatrist, by psychiatry. Now, we are trying to redefine and I will look. Although payments are made in that respect, the policies now need to read mental health, mental illness. And mental illness means everything. You come into work, you're depressed. It's mental illness. When a colleague passed away or something happened, people can't. So there should be a situation where you are loud and loud on a policy. You want to bring in somebody to do a group session between all the workers inside here. Each worker should be able to individually tap a claim under their policy to get a return that they could pay to somebody.
That is very progressive.
Yeah, I'm saying that is something that we're thinking aggressively to get across the platform to the wider insurance that focus on they have been paying.
Yeah.
If I sit here and say they've not been paying,
Yeah.
even though it says psychiatric, but what happened, it goes to a doctor, the doctor either gives you medication or something, but it's not really defined as mental health or psychiatry, it's just on a general illness.
Yeah.
But somebody should be able to say, I'm suffering from depression, I'm suffering from this, I'm suffering that, I'm able to make a claim on the mental illness.
What I like listening to you, I'm hearing, so you're the broker for this policy.
Yeah, we manage design
Yeah.
and look at concept, and we go very much outside the box.
Mm-hmm. And I like that you're anticipating situations, how the changing dynamics in the world with regards to cost, with regards to broadening certain definitions with mental health. And it tells me that you're really interested about the well-being of your clients, about workers, and you're looking at ways to give them more value under these policies.
Yeah, for me, Anderson, as I said, I look for the nation, the Caribbean US, because what is happening sometimes, I think we get lost many times, and even new insurance company look at it from the standpoint is that I'm trying to save the insurance company. I'm trying to do that. And sometimes employees send the wrong message across to people making claims. Because, understand, why do we take out insurance? For the foreseeable nature of making a claim. That's what all insurance is about. So when somebody say, well, I sell you insurance, but my intention is not that you make a claim, or you walk into an insurance company to make a claim and somebody puts up the face and somebody's saying a word behind you, because that's what it's all about. Anderson, I pay you, and in the event something happens, give me a peace of mind, a comfort, knowing that you are interested in my well-being and you want to put me back in the position I were before that claim. And that's what it's about. Some people put on all kind of stipulations because they send, and when you put on all the stipulations, you send a message that you really don't want to pay. And I am indeed tired of hearing people giving insurance company bad name, because really and truly, it's not the insurance company the bad name, it's the practitioners. Some know the craft, some don't know the craft. Some is defending this and defending that. And sometimes, I use this mantra, let me back up. When a person come before you, or when a claimant actually come before you to make a claim, you need to go through what you're going through and practice a one desk and a two chair, one person. When I say that, what I mean, you sit here, you're the person who received the claim, and you go through the claim. And when you come to a conclusion, put on desk and you go on the other side. You know why I say that? You go on the other side, and if you're satisfied, then all is well. If when you go on the other side, you're dissatisfied, you know you're not doing a good job. Right.
You need to go back to square one.
They need to go to square one. Right. Because a lot of people, I'm saying, they will go through a claim, and what they will present to maybe their family or their friend, they would not present it to some person. So when you now would have gone through that exercise and accept that what you put over, you would accept and you would present to anybody, then you know it could be justifiable. Now again, claims are negotiable, because you can negotiate with somebody at one time, they accept. Your negotiation stance is not a principle, because you negotiate one time. So what you might take today, somebody might not take tomorrow. What somebody may run away with, somebody may accept. So I'm saying we have to understand whether we are negotiating or whether we are settling or handling a claim based on policy conditions. And then when you relate now back to policy condition, you can have a situation that a claim is not payable, but because of the volume or the amount of money that the persons that are taking out the insurance put into, they make executive decisions. So for instance, you're very ill, you're sick, the policy limit is $50,000. But the insurance company said, look, you know what I mean? This person put in $1 million every year in me. Can I say I'm not paying the $1 million claim? Can I make an executive decision and do that? And I'm saying every company can make those decisions. So it's left to them to decide whether I want to make it or don't want to make it.
Excellent. Right. I want us to come back to an issue you raised earlier, and just for the benefit of our audience, underscore the importance of knowing the policy. Workers reading the policy, getting a full understanding of the limits, what their entitlements are on the policy.
I must start here by saying there's always a phobia and a fear factor understanding insurance policies. I don't know if you remember ever hear talking about the fine print.
Yeah.
So everybody look at it on the fine print and it says, okay, give the alcoholic conditions.
Yeah.
Sorry. And it sometimes could be very difficult. So what I believe in, we have 32 companies on this grant program.
Yeah.
I have indicated, I've been doing it over the years, but I've indicated now that what I want to do, each company set 2 sessions per day, and I'm prepared to go and teach it, do it. You know, I work with the workers union from time to time on the when you all have your different programs, and I enjoy doing that because it educates people.
Yeah.
So what I'm saying now is that I'm prepared to go out there, because if you leave it, I brought some documents to you and you already tell me so much. If I put it before, what do you think they're going to do?
Yeah.
They have this jargon, Antiguans that are reading public. It's not, sometimes it's not really a reading public, but there's so much information. And sometimes the information that you are looking for, you have a 50-page document and it's on the 49th page.
Yeah.
So by the time you cover half of 24, you don't really want to go anymore.
Yeah.
Sometimes you feel you get the benefits. So I think that insureds, which is the people who buy insurance, the insurer should take some time at the front end to explain to the people what the policy covered.
Yeah.
And as I said, 9 out of 10 times, I will tell you from experience, you come and you ask for something, they give you and you walk out, you don't know I have. And I take this opportunity to tell the general public, there is some misconception of brokers and what brokers represent. To you, the listening audience, you don't pay a broker for broker services. The insurance company pays the broker a commission. And the broker is your eyes, ears, nose, mouth, heart, everything. They have a higher fiduciary responsibility to you than the insurance company. Because what happens, when you come to them, they're supposed to tell you, they're like a mechanic. They test you and they're telling what you need. And I'm seeing too much of that mistake made by people wanting to walk into insurance company and buy insurance. That's the biggest mistake they're making. It just happened that Antigua is not a broker public, but in Jamaica, Trinidad, all those places, an insurance company would not accept you walking in. Because when you come in, they have to go through too many things and to find out what. When a broker brings in something, it's considered clean and they know the standard should be established. So I'm saying we have banks, we have hotels, we also have the people. Just think about somebody working in a bank and they hold a position in the bank, or a credit union, and they're going to buy a cyber insurance policy. What they know about the government of a cyber insurance policy? You have deductible live and a deductible what they know about safety net in the market and everything.
Yeah.
So we keep saying to them, please, please, please avoid walking into insurance company on your own. It's like you're walking to court and want to defend yourself and you don't know the parameters. So that's why people go to lawyers, because they feel only a lawyer can help them. And it's the same way within the insurance industry. A broker knows it, and a broker can take you in and take you out and get. I'm saying we have worked with people. Just last year, we worked with a client and we overlooked the client's portfolio. The client was, let's just use a number. Our client was paying $100,000 for a particular policy. And we got the same policy, average competitors in the same way, for half the price.
Yeah.
You ask yourself a question, why is it that person was passed? They weren't having claims, but then it's just a situation that sometimes for the market drive policy, premium goes up. And then nobody ever look on it to take it back down. Because I'm saying once, if you have 2 bad years, your premium going to go up.
Yeah.
And then you have 5 good years, and nobody ever touched it. So you up there, but then you're giving them returns on investment. And I'm saying once you're getting return on investment, you should give back
Yes.
to your to persons.
Yeah.
And these are some of the things that insurance company might want to hear, might not want to hear, might feel away about me. But honestly, I am about my nation, my people, insurers. And I think they should benefit, because if we go back over the years through here, in terms of claim, of the last bad earthquake was 1974. I know of people that who have been paying insurance for 30, 40 years, never make a claim. One man looked at me and I gave him a quote on a risk. It's $30,000 a year. And for 10 years, he decided not to pay insurance. 10 by 30 is 300,000. He never had a claim, never make a claim. And that's what people have to understand that when you don't take out insurance, you become your own insurer.
Yeah.
So it's not that you don't have insurance. You have insurance, but you are your insurer. You know what I mean? But as I said, we segue a little out of that. Time is on us. But as I said, it is important. And I was very happy when the ABHTA, which is the Antigua Barbuda Hotel and Tourist Association, and the Barbuda Workers Union got together with their workers and get together with employers and asked us to design and put this program together. And I'm saying it is reaping dividends to employees and employee dependents. So I'm saying it's not only employees, you have people working in other areas. Another thing that I want to say here too, there's nothing wrong in having multiple insurance. So for instance, if I'm working at a hotel and my wife is working at a school, I can put on my dependent. And if she has insurance at another area, she can put you on as a dependent.
Okay.
When you do that, what happens? For instance, if you making a claim and your limit is $50,000, and you have a procedure, it's 100, you can claim on both insurers. People are saying you can't claim on both. You can claim on both.
Wow.
Because
you
would have a
both,
premium,
right? Yeah.
and you have a limit of 50 on your policy on the other side.
Yeah.
And your husband, so the wife has a limit of 50.
Yeah.
And the husband have a limit of 50.
Yeah.
But the claim is 100. So they claim 50 and 50. Many people don't know that.
Wow.
And many insurance companies said those things to people. Why? I don't know.
So even for folks who are on this policy with the ABHT and the Antigua Barbuda Workers Union, if you see the need, I suppose, then you should feel free to expand your insurance coverage.
Anderson, if you are on the program here and your wife is on something with another insurance company, for instance, 2 areas I can tell you, look at dental and vision. Dental and vision normally not more than about 6,000 or 4,000 or something. And you know what dental and vision costs around here.
Yeah.
So just think about it. You have 2 policies in operation and you're going to do some dental work and it's 12,000. The limit under your policy is 6. The limit under the other person under your other beneficiary is 6. You claim on to insurance company, it comes to 12,000.
Yeah, great.
Right.
Yeah.
Many people don't know that.
So let's jump back into the policy just for a bit more, because time is winding down. When you were designing the policy, of course, in collaboration with the Hotel Association, the workers, were there any unique risk or needs for workers in that particular industry, the hotel industry, that you looked at?
This came out of COVID. And as you know, what happened to hotel workers in COVID?
Yeah.
Right, insurance policies, once they're laid off, obviously, there's no insurance.
Yeah.
And again, I always look at the situation. When we need insurance most, it's something that's the time you cut off. I was telling to you that you get cut off of insurance. But imagine paying insurance from 15, 16 years, and then when you get to 75, when you most need it, you can't have it.
Yeah.
So what happened is, during the period of time that they were having challenges, which is Antigua Barbuda, the executive body was speaking to the insurance company, and no one wanted to look at them and said, look, they're in the bad days, things are shutting down, what can you do? Can you hold us covered for 3 months or something, and then we would have gotten back, we can pay you back. And so people weren't listening, and they're listening and thinking about COVID come, what the expense are going to be, whether I could be paid. And then you remember also that based on employee benefits and ruling, that if you're laid off over a period of time, then obviously you're paid off on what. So we're having all those challenges. And that's how we went onto the program using the data that they present us to be able to, because what we actually did is we actually price it. We price it and put it out to 4 companies. So it's not that we put it to companies and tell them, give us a premium. We price it.
Okay.
So we price it, and because of the fact that it is so large and dynamic, the insurance companies came to, and then when we got the first information coming back, we say, look, these are what we have. We're prepared to put it back out to you all, and if you all think you all want, and when we put out the second tranche, they came back even better.
Wow.
And limits went up, and we're looking, because as I said, it's 32 people, it's bringing in between $2.5 million or $3 million, and everybody would want to have a bite of it.
Yes. So
as a result of that, that's where we reach. And then we were seeing challenges in pre-existing illness, people having diabetes and what, people didn't want to take people. And then now, because that we have a bigger group now, we were able to say, okay, look, accept pre-existing illness, and we set limits, not the normal limit. So if this not your, if all is well with you, healthy, and there's a limit of 50,000, we can say, okay, look, for pre-existing person, let us use half that limit or something. And we were able to work it, we were able to discuss, and I give thanks to the insurance companies who are willing to buy in. But I'm saying, times have changed, we need to see more.
Absolutely.
We have a situation where that I spotted in a policy just recently that when you shall have attained the age of 19 years, if you're not going to school, you come off the policy as a dependent. However, if you go into tertiary education, so you go to university or something, you're accepted for the period of time at university up till you get to 24. However, the same policy that said they'll hold it to 19. If you leave Antigua and go into a boarding school at 16 in the US, they say they cut you off. So what I'm trying to say to them, if you accept at 19, how are you going to cut at 16? But what happened? In years gone by, people never peak at 16 and 17. You go to school at 19, you're maybe doing A-levels and going to university. Now people are going to university at 16. So I am humbly asking the drafters of them to make that change. Because for me, and I don't know how you look at it, if you can be a dependent at 19, how are you going to say you can't be a dependent at 16?
Yeah.
And all it happens because we never had those situations happening.
Yeah.
Right.
Yeah. So tell me, are there any avenues, mechanisms whereby workers on this policy can give you feedback so you could perhaps look at and negotiate
what we
for further
normally
expansions?
do is to say to these people, feed the information to your HR.
Okay.
And at times they can call us, but we much prefer feeding to HR.
Yeah.
So we'll have a more wholesome. So it could be a document, 3-page document saying, this is the problem that our staff are having, they're making claim, and we like to emphasize. So what we normally try to do, the policy run from January to December. At September, we try to get what we call the loss ratio. Okay. So we know the total amount of claims that were paid by any single unit or all the units, and the total monetary figure in terms of premium. So that's how you manage the loss ratio. So it's the loss over the premium times 100, and you get the percentage to relate loss ratio. That's our loss ratio. Okay. So I'm saying here, if a 50% loss ratio mean every dollar that you give, you pay out 50 cents in claims. So that's how loss ratio is.
Okay.
Right. So if you give $1 million and you pay out $500,000, the loss ratio is 50%. If you give $1 million and you pay out 900,000, the loss ratio is 90%. If you give 100 and the person pay out, if you give $100 and the insurance company pay out to you $1.50, then they're operating at a loss.
What's the usual target ratio?
The usual target that, to be honest, many insurance companies love to see the 20%, meaning that you give them $1 and they pay out 20%. Once you begin to touch the 50 cents to the dollar, and accepted average threshold may be 60, 55. They don't want to see it higher than that. So it's important that we as brokers now try to educate the people on how to make claim and don't abuse it.
Yeah.
And that's what is important, that as brokers sit, talk to HR, talk to people, talk to persons. These are how you can make claim. This is what. So you do regular screening. You have dental cleaning twice a year because that's accepted. Those kind of things, vision checks, you know what I mean? Change lenses, change this, and those things. Once you stay within that ambit, you can have a pretty good loss ratio looking through.
Okay.
You know what I mean? Because I'm saying if you visit the doctor, you will have a healthy workforce.
Yeah.
But if you don't go to the doctor, one day your workforce is just going to fall apart.
Yeah. So please go ahead.
Yes. The other areas is that of this program that did not, you have overseas medical.
Yeah.
So if you have this program and you have to go overseas, some of us, the insurance company have their contact and broker persons, they will pass you into, and you have overseas network. So you can't be handled here, you go overseas. And also, if you're overseas and you're sick, you can call back in and you can deal with their network, or you pay and then when you come back, you reimburse. So those are some of the advantages. And as I said, you have the life component, you have the accidental death and dismemberment component, and I can put a typical example. Workman's compensation. If you're injured on the job, workman's compensation is different to the group medical. So if you're injured on the job, you can't make a group medical claim. Group medical claim covers you basically sickness and disease, and if you're at home and anything happens. So you break your foot at home, you're covered on the group medical. You break your foot on the job, you're only covered on your workman's compensation policy.
Okay.
You can't make two claims.
Yeah.
Right. But I'm saying is very, very important, because I'm saying all the group medical cover you overseas, and if you have to fly you overseas, if you're flying overseas and you need a dependent to work with, they pay for the ticket, they pay for accommodation, they pay for all these things. So group medical.
And the limit on the policy again is?
The limit, well, they have category limits.
Okay, yes.
So within that, so what I'm saying, they have lifetime limits of 3 million, 2 million, 1.5 million, 1,500,000. As I was speaking to you about age factor, when you shall have attained the age of 65, if you have a 3 million, it will be chopped by 50%.
Yeah.
And normally, as your age go, the risk of your premium, because then you're more vulnerable, you're higher risk. You're higher risk of anything happening, sickness and disease at 65 than at 15.
Yeah.
And you also, if you're doing like an individual medical at 16, 18, the price is better than you go look for it at 50. And you cannot get onto group medical as a new person above age 50 or 59.
Oh, okay.
Right. That's the other part that you should know. And I say again, you fill out application form, you check your screen, they agreed, yes, we'll accept you, and it goes down. Most policies have a 3 months waiting period.
Okay.
Yeah.
Now, just before we wrap up, there was one area that I'm not sure if we ventilated enough, which I was coming to. And it wasn't my intention to bring this one up at the end, but the life component. Just briefly tell us a bit more about that.
Okay, so what happened is, let us say, for instance, just recently we had some folks dying not on the job, but while working.
Yeah.
There's a life component of about 25,000. It's very small.
Yeah.
25,000. So, for instance, if you die while being an employee of a company, you get 25,000.
Okay.
Not you get 25.
Yes, of course.
Your beneficiary get 25,000.
Yes.
However, you have to have that designated beneficiary noted, or you can say to your estate, right? So you can designate, and you don't have to designate your family. You can designate anybody. So if you want to say, look, I want McCoy to be my beneficiary, you just put my name. Whether you have a wife, child, they can't do anything about it. Yes.
All right. Brother McCoy, thank you so much for spending time with us. But just before we go, are there any other thoughts that you would like to add, any salient points you'd like to highlight?
There are a lot of areas within the group medical that we have been working on to let it look more dynamic. The challenge that we have is that pricing. And we want to, the pricing to be affordable. So more we ask for is more premium the insurance company. And they're right.
Yeah.
And that is a little challenge that we're having now. And some people are accustomed to a premium range. And once you step over that, because we love to see vision higher, we like to see dental higher, we like to see that the cost to doctors increase, because cost to doctors now range between 200 up to 500.
Yeah.
And the policies, most of the policies are between, some still having 150, and even things like physical therapy. Physical therapy has gone to 150, 175. Some companies still have $60.
Wow.
And those are the areas, because a lot of companies have not made any changes going back far back. I don't want to put a time, but I'm still seeing very, very low cost for services in a lot of policies. And we are hoping that one day we can make a wholesale change in that. And as I said, the only program that we think that we can use and make success is this particular program, Antigua Barbuda Hotel Association and Work, because the volume is dynamic.
Yeah.
There money you have carrots that you can dangle.
Yes, yes.
In terms of premium, in terms of number of persons,
Yeah.
and in terms of loss ratio.
Yeah.
And once you have those carrots to dangle, as broker, we can get results. And then we having more players coming into the market. Yeah.
Excellent.
Right.
McCoy, thank you so much for your time, for enlightening us, not just on this particular policy between the Hotel Association and the Antigua Barbuda Workers, but broadening our understanding on the insurance field and giving us a better scope and appreciation as to what to pay attention to with regards to the world of insurance.
Thanks very much to the listening audience. Thank you very much to your production team. I think we need to do more of what we're doing.
And I agree. Again, folks, thank you for being with us here on this edition of the Workers Podcast. Do remember to join us again next time as we explore a range of issues as it relates to workers in Antigua and Barbuda and the general population. I'm Anderson Edger.